What is going on, guys? Welcome into Stock Talk with Nico Kritikos. Today, we are taking a look at Block, also known as Square in the past, but this stock is up over 7% today. And the best news I can find is really that ARK Invest picks it as one of its top picks for 2024. And it looks like there's some other companies. It got issued a new buy at Piper Sandler after impressive Q3 results. Other than that, though, today I'm not seeing a whole lot more of good news. I mean, it says Block plans the sale of common shares. That's not good. That's not helping up the stock price. So, other than that, that's all that's out there. But the stock's up over 7% today. I used to own this stock back in the day. Let's see, the last time I sold this was a year and a half ago. I sold out at $60 a share, $64 a share, and $65 a share. So I'm glad I sold out where I was. I mean, the stock is basically flat in the last 5 years. I mean, anything that happened between 2020 and 2022, this is all just like a ridiculous valuation, inflated artificial valuation of the company. So that's just I don't know. I don't have a great perspective, or I mean a great idea of this company just because they haven't put up great numbers. Like, okay, their revenue the last 12 months is at 23 billion. That's good, right? Net income, they're finally profitable now, $1 billion of net income for the last 12 months, while they're doing over 23 billion in revenue. Like those are not very good numbers. I mean, we're looking at margins of 1%, right? ROI 1% and profit margin of 5 or 4%. So it's not very good margins. Shares outstanding is basically flat, not a big deal. The balance sheet is not bad. 8.8 billion in cash, 5 billion in debt. That's not bad. That's healthy. EPS is good. Free cash flow looking good. Um, that's basically it for that. Analysts have them doing a huge of EPS to 3.5 this year and 4.5 next year. Now, it's hard to value the stock because they're barely profitable ever, so you have to use price to sales. And so price to sales is probably a healthy range, is probably around 1.5, maybe 1.7. We'll say 1.7. Okay, 1.7 times this year's revenue. The stock should be what, a $41 billion company, but it's actually 55 right now. So based off of next year's sales, 1.7 times 27, the stock should be a $46 billion market cap, looking like it's kind of overvalued right now, unless you wanted to, I guess if you wanted to trade at two times, right now it's a little bit above two. So if we traded at two times sales, that means it's a $54 billion company. If we want to be kind of generous, which is the stock's still trading higher than that. So this is not a good buy. It's probably overvalued right now. And again, it's not a very impressive company. If we want to let's take a look at the equity here and see how has that done the last couple of years. I'm just not very impressed. Equity. Okay, equity has gone up a lot. $2 billion, 18, 19 billion. That's not bad. Probably, well, that's probably from Bitcoin, to be honest. I think they hold a lot of Bitcoin. So that's probably helped. Um, but yeah, it's better when you value it on a PE basis anyways. Let's see if we can get an idea for, I mean, just the idea you're paying, they're doing what? They're doing a little bit over a billion in profit, and you're paying 55 billion for the company, which means you're pretty much paying 55 times earnings. That's a lot, especially for a company that is, I mean, they do have a big EPS jump. Maybe that's what investors are pricing in here, but 11% growth, not bad, not great. Um, so we're looking at, if we're talking about a $91 stock and the earnings are be 4.5, 20 times forward earnings. That's not bad. Okay, if they actually do 4.5 of EPS next year, this is not a bad price. I could actually see it going higher. I could see this being maybe $120 stock next year. I think that's realistic. So maybe I take back what I say about what I said about the revenue. The valuation's not bad. It's not bad. That's fair. So that's my analysis. I definitely don't want to buy it. They got a lot to prove. I want way better margins and way more consistency with profitability before I think about buying this. And I like Jack Dorsey too, but no, I can't invest in a company like that. So thank you for watching. I will see you guys later.